Hi, this is Randy Finney with the right side of the chart, and this is a closing market wrap for the week ending Friday, May 24th, 2019. Let's keep this one brief. Today was a flat day. We had, here, let's go over the indexes real quick. Here's QQQ down 0.07, so that is effectively a flat close. SPY up 0.23, just a minor green close, and then the small caps, they were actually pretty strong today, up 0.89. So a decent close. Now, so what most important, and I can just say this very quickly, what we have now is the third successful defense of the 178 level. It's not three consecutive defenses. Remember, we first tested it back here. It was a key support level outlined in advance. That was hit, bounce. Yesterday, as you recall, we undercut it intraday, but managed to close right back on there. You can see that body almost perfectly right around that 178-ish level. And then today, same story. So now, I would have much preferred a green close, as I mentioned. Well, I'm trying to recall. I put out a lot of posts this morning on the site and did a video for members. In yesterday's video, I was leaning towards a bounce scenario, and as of this morning, I added several long trades. I went home last night long, and even increased that long exposure today. So I'm leaning towards a bounce, but to put it succinctly, the markets are still in a very precarious technical situation. Okay, we closed on that level again, but we didn't rally off it. I would have much preferred and gone home with a heavier long position. I'm going home mildly long. Had we hammered off there or rallied off there and put in a big green candle today, we had the potential. But today was OPEX, by the way. If you're not familiar, options expiration, standard options for equities and index futures expire the third Friday of the month. That's today, and so what you get is that noise. So we did get the lift in the futures last night. That's what I was looking for. We had a lift in the futures, came down. This is by the way, this is a 1 minute chart. I know I'm jumping 2 minute chart. Let's make it a 1 minute chart. And there it is. So here's today's price action in QQQ. And again, that's where most of my focus is now with the market leading stocks there. That dotted line is yesterday's close. So we gapped up. Came in, back tested the open, backfilled the gap, did it again. A little selling last minute, and this is just I attribute this to nervous. Well, it kind of shows a little more longs and shorts in the market, but such a small drop. Let me get away from that. But that's just basically traders closing positions out, whether it's due to OPEX. I see how they parked it right around 178. Probably a lot of options expiring there, and that's probably, I imagine, max pain. Max pain is where it's a level where the maximum number of options, both puts and calls, will expire worthless. I haven't checked it, I don't know, but either way, coincidence or not, we were right around that 178 level. Hugged it most of the day. And so again, take it for what you want. Take it as the market refuses to bounce off there. If you want to look at a glass half empty, glass half full, three successful defenses. And today was basically a day of consolidation. Yesterday was a big down day. That's a day of movement. We've had a couple days of consolidation here. Today was consolidation to close flat. Let's not rehash everything else that went on. We already gapped down through there, but most importantly is the weekly charts. I am still very much longer term bearish right now. Here's the weekly charts. QQQ is broken down, three big red candles. On Friday I like to visit these weekly charts, and so we have yet the third consecutive red candle following the breakdown of that uptrend line off the lows. Divergent high, bearish PPO cross pending. So let me not mix words. The markets are in a very precarious situation, posture right now. Remember, Monday is a holiday in the U.S. markets. Markets are closed, so we open Tuesday, and chances are something's going to happen in the futures overnight over the weekend, and we're either going to gap down, and that's going to be pretty bearish. And at that point, we'll look at some levels here in a second, or we gap up, take out the downtrend line. I am favoring the upside scenario, the resolution. I made that somewhat clear last night and pretty darn clear this morning in the updates and everything else. But again, I may flip on a dime. If we somehow just go down and take out those levels, I may be, closed out of the I may be closed out of, most of what I have are futures. So, and depending on what happens over the weekend, I may be closed out and reversed to shorts before the market even opens on Tuesday. But Let's look at a couple other levels here for you. There's 178, just a really nice support level on QQQ, and again, it's been defended. Bullish divergence on the RSI on the 60-minute, I'm sorry, daily chart here. There we go. And we have that wedge-ish type pattern there as well. So this is a bullish falling wedge. Be better to have divergence on the PPO, but again, I always say this: the longer term time frame charts to me take precedence over the shorter term charts. That weekly chart that we just looked at, I'll say it looks like death to me. We need a little bit more work, confirm that bearish PPO crossover, but I think it's already pretty much written in stone. I shouldn't go that far. Anything can happen. Maybe we pop back up, make another divergent high, but I just want to be clear what my scenarios are, because sometimes it confuses people. So I'm near term bullish, looking for a bounce, and then a continuation or a resumption of the downtrend. And I think the bounce, if these levels hold, which I suspect they will, if they hold next week, it's a tradable bounce. It's not just a, what we've had so far. Well, that was a tradable bounce there. I'll say that. That's I reversed there, went long, shared my thoughts on that. So we get another tradable bounce. I already didn't add QQQ, but I added some related trades, and I'm going to share those price targets over the weekend on the site. But I'll tell you right now, look, 183. 182.83-ish right there. That's a pretty decent level. If the downtrend gets taken out, this is a wedge, we could pop that high. What I think will happen, and I suspect this, if we do reverse on next week, if you take this wedge right here, and it's not, I'll tell you, it's not the best defined wedge. Yeah, there's there you go. It's a decent wedge, but it's not great. If you take the widest part of the wedge, this is a simple but I believe the most effective measurement. Take the widest part of the wedge, I missed that line there, add it to where the wedge breaks out, gives you your measured target. That measured target would come roughly right here, that previous high from last week. So if what I think will happen happens, we start breakout next week, everything's looking bullish, the bobbleheads come out on TV and start saying, oh, buy, this was a great buying up, all that, and just as that rally starts looking really good and it looks like we're headed back to new highs and bullish sentiment spikes and most of the shorts have covered and cleared out, that's when we shoot down and reverse suddenly. So it's a rally that if we get it, first of all, we don't even have it yet, but if we do, I'm probably not going to try to milk every last penny. I may trail up stops and allow it to run, because anything's possible. It could certainly go on to new highs and destroy what that the bearish technicals on the weekly chart, or foil them, I should say, or maybe just postpone them. That's probably a better word. But that's where I'm leaning. But again, I cannot impress enough the fact that we closed right on support, or just a hair above it, and if we gap down next week, I don't see a whole lot. It would be quite bearish. It would be bearish for many reasons. One of being the fact that we would have then, here's that wedge on a 60-minute chart. These were the recent long trades that we closed out yesterday in QQQ. If you have a bullish chart pattern, this is a clear bullish falling wedge confirmed with bullish divergences across the board here on the 60-minute chart. PPO, RSI, everything that I like to see, and I think most bulls would want to see in a bullish falling wedge. I mentioned we could undercut if we pop. Let's say the futures open, or the market gaps down on Tuesday, but nothing huge, and then it can reverse real quick. The buyers step in. All it will do is just work us down a little bit more within this wedge, and then still have plenty of chances to break out. So I guess where I was going with this is if we do reverse and break out of the wedge, and we fail to meet even the measured target here on that wedge, which probably be somewhere up around here, and we fall shy, the selling just kicks in right as things start to look good, and we go down. That's going to be pretty darn bearish in my opinion. And that would be also, I think, a signature or a tell, if you will, of the bigger picture. If this bullish wedge can't play out to, if it fails to meet the measured target and reverses just shy, I think that'd be pretty bearish, and say, look, we're probably in the early stages. This is probably just the initial leg down, and a much deeper correction to come. And again, if anything else happens, we go up and we take out, move well beyond that level. That's a big level right there. And I'll just tell you, that'd be my max bounce target, 187.76, just we'll call it 188. Reason being, if you recall, QQQ double topped back last year in 2018, stalled there a little bit, and then finally broke out of that level. So we had a breakout there. It proved to be a failed breakout. So that is a significant level, resistance level. So if we head up there, that is where I'd say, again, my max bounce target to keep the bearish scenario alive. If we break it out again, then this was just a correction, possibly on the road to new highs. Again, any new high at that point will be a divergent high on the weekly, as I showed you a minute ago, and almost certainly on the daily as well. I'm drawing out what the PPO would look like here, draw out what the RSI would look like if it kicks up a little, come back in. Still plenty of room to put in a divergent high right there. If that's what it looked like, those would be your divergent lines. Actually, no, not here on the RSI. Yes, definitely on the RSI right there. There it is. It would look like that. And there's SPY. Remember, SPY didn't put in a divergent low because SPY never even undercut at yesterday's lows. It didn't even, it reversed a little shy of the lows on the May 13th right there. That's yesterday's candle. And today we closed above it. So take it for what it's worth. SPY is, holding up a little better than, and I'm seeing a lot of money going into defensive stocks, utilities, things like that. And that also speaks a little bit, and I talked about that in the video earlier today for members, talks about where we are likely in the economic cycle. Went through some of the sectors, defensive sectors, and versus the growth sectors in the S&P 500, and you can see a trend where institutions are moving into those defensive issues, as they do usually when they foresee a economic slowdown and or a recession coming. So I'm still in that minority. Maybe that minority is expanded since a few weeks ago when we were at the highs, but I'm still in the camp that will be probably most likely embarking on a recession at some point in 2019, as well as another leg down the bear market. But those are all long-term views, and I don't always trade my long-term views. It helps formulate the picture. So for now, like I said, mildly long going into the weekend. And I suspect I'll either get burned on a gap down, or again, futures you can they can open down too. You've got the weekend coming up, but ETFs, individual stocks, those positions, Apple, Intel, a couple of longs I've taken. They're either going to gap up or down Monday, and so be it. Nothing ventured, nothing gained, or Tuesday. I'm sorry. It's been a great week, so. Worst I get back some of the profits, and then maybe if things look ugly, reverse back to short. But as of now, favor more upside. SPY, let me show you futures, and then we'll wrap it up here. ES, okay, the big levels I'm watching. This is a 60-minute chart of the S&P 500 E-mini futures. Same story since the highs. We have a very clean downtrend line. It forms this megaphone pattern here. I can probably get rid of this. Let me get rid of this trend line here. Make this chart a little clear. So you can see the megaphone pattern, descending megaphone, if you will, and you have a downtrend line right here to watch. So far, SPY put in or ES put in a little bit higher low, reversed just above that 2793-ish support level right there. And so next week, what you want to look for would be a breakout above that level. And if so, and I mentioned this earlier today, this would be my preferred bounce target right now for ES, if you're an ES trader, 2892. That's what I could see happening next week. Let's try to quantify that for you. Let me move this line away for now, measure up here, just to give you an idea from where we close, or where we're at right now. About 2.5% rally in the ES if we get it. And that's just to say, the charts are dynamic, and so is my analysis, but as of now, let's just say that's the bounce target I'm looking at. So it's nothing big. In fact, you can consider picking up nickels in front of a steamroller if we get it, and if my longer term bearish scenario plays out. But I think it might be a little more in NQ. Let me try to give you NQ here. All right, NQ is still well below its comparable downtrend line off the highs. There it is. But there's that wedge type pattern in NQ. These are the futures, NASDAQ 100 futures. There's your divergence on the PPO, pretty strong, about equal lows on the RSI versus lower lows in price, so that is confirmed divergence there. Bullish falling wedge pattern, and so your buy signal would be a rally up to here and then a breakout. Like I said in today's earlier video, there's two objective times to go long on a stock or an index or any security you're trading. One is a pullback to support, which is, that's currently what I'm doing here. The next time you have an objective entry is a breakout above resistance, and that would be, in this case, you have dual resistance levels, a downtrend line plus a 74.58 level ish. We traded a little bit above it, so I'll call it ish. Call it 74.60 if you want. And a breakout above that level would probably open the door for a run at this previous reaction high here, wherever that is. It's about 76.36, and let's just measure that out and see what that would be. See, that's about a 4. If we got up that far, about a 4.3% pop. But I also have resistance right here at 75.42, and that's about a 3% rally. So let's just say right now, we'll see. Again, this all may be moot by the time the markets open on Tuesday if we're down here, but that's about a 3% upside. That's what I'm looking for in QQQ right now. And at that point, maybe we'll see. I'll either do one of two things: either book profits or just trail stops up and let it ride in case it morphs into something more. And again, if we gap down on Tuesday, or the futures go down over the weekend, here's a support level that would concern me. Anything up until then, it's still going to keep the divergences intact. PPOs roll across, about to poised to cross down. We could get a thrust down over the weekend here, or Sunday, whenever futures start trading again. But so that's what it would look like. You can see it would keep the divergences intact and allow for another thrust down. It would actually, if we got it and we reversed, I'll tell you, it'd be pretty darn healthy for the bullish scenario for the rally. It would clear out, I'm sure it would clear out a ton of stops on longs on NQ, probably suck in a lot of shorts too if we undercut that low. So, here's the bottom line again. The economy's been, a lot of indicators, some rolling over, some not. But the bigger picture is, look, we just had the biggest correction so far this year. The Qs are down over 7% off the highs. Here it is. So from the recent highs, we've dropped 7%, 7.5%. To support, with a lot of, several key stocks at support with bullish divergences. And, if something breaks in the market, if there's, some big hedge fund blow up or a lot of margin calls, or who knows, some crazy headline comes out over the weekend, that support breaks, we drop. Otherwise, I think this is just about as good a time as any to step in and buy. Whereas there's two types of traders. If you are of the bullish mindset, if you were clamoring for new highs and beyond right here, and again, if you liked it QQQ here, I don't see why you don't love it here at 178 if you think we're going to new highs. But even as a swing trader, see, that's what I am. I'll talk on my longer term views, whether they're bullish or bearish on a stock, commodity, anything else. But I'm going to trade the charts, and right now that's the way I'm looking at. And then at the appropriate time, scale back into shorts. Now, finally, for those of you on the site, and I know there are some that I talk about the big picture. If you're not an active trader and you're trying to swing for a triple or a home run or even a grand slam, and that would be to keep track on this chart. We have solid sell signals on the weekly chart. Last time we had a breakdown on the weekly chart and sell signals was right here. And so that's what you have to do, is define your trading plan. And maybe I'm wrong on a bounce here. Sometimes I'll try to game. I like to game the zigs and zags. That's what I do as an active trader. But I'll also lay out my scenario. In some positions, I will hold out for. So you're going to get counter trend rallies and any move down. But if you're looking for this, just a test of the lows back in 2018, or maybe even just a deeper correction, or you're open to the potential. I think Qs are coming down here at some point, probably this year, later this year, or maybe even not so late. That's another 25 or so % downside. Then you stick with your positions. You're just going to have to give them wide enough stops. There's no way to swing down 20-30% drop in the markets without suffering 5+% givebacks. That's the nature of any correction, especially in a volatile index like QQQ. The counter trend rallies, if you're running tight stops and you can't take a 3-4%, that was a 10% kickback rally right there. I'm from this point right here, right there, from here to here. That's a 10% kickback rally. From high to low to high right here, that's a 10% kickback rally. But the reward was we had a major sell signal, came down, hit my price target, slightly exceeded them. That was a 23% drop. So again, define your trading style and what you want to do. If you're an active trader and you want to try to game the zigs and the zags, great, more power to you, but you may end up getting shaken out of a position. Now you can also separate your funds. You have long-term accounts, maybe IRAs, you have some the short ETFs in there and you want to hold those and then try to game some counter trend bounces in your active trading account. That's up to you, but if your skill sets lie there, great, you can try it. If not, I'll be very clear. I think any counter trend rallies aside, I still think there's more downside in the coming months here, considerable more downside, that is, too. All right, we're going to wrap it up here, and we'll pick it up Tuesday. If anything big happens Monday night in the futures, I'll do an update for members. I'll get in the trading room or post something on the front page. But other than that, we'll pick it up here where we left off on Tuesday. All right, have a great long weekend, everybody. This has been Randy Finney with Right Side of the Chart.